Good morning, everyone, and welcome to the European crossover webinar. And let me move this out of the way. Well, economic-wise, it looks like it's going to be a relatively quiet session. We did get Eurozone retail sales, came in a bit better. Well, actually, came in right here. We haven't shown right here. I'm not sure why I did an update here. We do have Canadian IBPMI today at 10 a.m. Eastern. That appears to be the only thing that's moving here. And you can see the dollar CAD's weaker, and we've got crude oil moving higher here. Let's go on and get in here to tell you what, I gotta say I'm a bit disappointed with I expected a whole lot more volatility here, and so I'm a bit disappointed there. Moment. I thought we'd see a whole lot more moving around, and we didn't. I mean, we got a little bit, but it was within very relatively tight ranges. But I thought we'd see some good swings. I thought we might see gold dip down a little bit lower, then swing back. And although we've moved higher and the dollar's moved lower, since the results hasn't been too much of a change other than the dollar just pressing. But we're coming into some key support here, maybe a little bit lower here. This whole area is support right now, right in here, which when we got to 67, I have that on a 30-minute, but maybe a little bit more is going to come in right there at 53. So we might be able to get the euro to push a little bit higher, gun the stops at 15, and then we may run out of gas maybe around, I don't know, 15, 20-ish area. We'll get to that. But as I indicated, a bit disappointed with, I thought we'd see a lot of fireworks, and I don't think we saw that much. But anyway, we'll go and move into the news and get into the analysis because, like I said, we're going to reset everything. We had put in big ranges, which I thought we'd see big moves, and it certainly wasn't anything like I thought we would have, other than just when they would announce at the closing of each poll, you'd get that push lower in the dollar, and then we'd come right back. But anyway, it says the New Zealand dollar rallied to a 3-month high on Wednesday as the country's jobless rate unexpectedly dropped to a 10-year low and trimmed the already low chance of a rate cut, while the Australian dollar was steady before the U.S. midterm elections. The Kiwi climbed to 67.63, a level not seen since early August, after official data showed New Zealand's jobless rate at 3.9% in the third quarter and confounded forecast for 4.5. The upbeat figures might have implications for the central bank policy as it meets to review rates on Thursday. The Reserve Bank of New Zealand is all but certain to keep policy at a record low of 1 3/4. New Zealand's employment growth rate too exceeded expectations by doubling to 1.1% in the quarter. However, a rate hike can also remain distant given there's no signs of inflation in the report. The dramatic fall in the unemployment in the third quarter suggests the Reserve Bank may not wait until 2021 before raising rates. Across the Tasman Sea, the Aussie Dollar held at 72.53. Trading was cautious as investors awaited the results of the U.S. midterm elections later in the day. The Democratic Party is expected to win control of the House, with Republicans likely to retain the majority in the Senate. That did take place. I think the Republicans, before I went to bed, had already gained a couple of seats in the Senate. So sterling rallies on reports of Brexit November timetable. Sterling rose for a third consecutive day on Wednesday, buoyed by a BBC report that Britain is preparing for a Brexit agreement by the end of November. The pound has benefited from growing hopes and among investors that Britain is close to reaching a deal with the European Union. Opposition within Prime Minister May's Conservative Party and Parliament has made investors wary of betting big on the pound. Overall, the market is banking quite clearly on a deal, but to me, things look less optimistic than the current sterling levels illustrate, said Ulrich Lippmann. Time is running out, and in view of the current mess, I consider sterling at its current level of 131 to be unattractive. Headlines on the progress of Brexit talks have made the pound increasingly jumpy. Implied volatility on the 1 month pound gauge of expected swings in the British currency is at highest level since February. Some unwinding of short positions has also helped sterling, while net shorts have shrunk slightly from more than 2-year highs. Britain and the EU wish to hope to keep the border between EU member Ireland and the UK province of Northern Ireland free of frontier controls after Brexit. This is seen as crucial to the 1998 Good Friday Peace Accord that ended decades of sectarian bloodshed in Northern Ireland. The BBC reported on Tuesday that May planned to give a speech on November 19th, saying she had delivered on the referendum with a deal which brings the country back together. But a spokesman at May's Downing Street office dismissed a report in which the BBC cited a document entitled Brexit Communications Grid Summary. And on to the dollar. Loses and gathers steam as U.S. stimulus hopes fade. The dollar's losses accelerated on Wednesday with an index falling 0.5% against its main rivals as the outcome of a split U.S. Congress raised expectations that a major U.S. policy boost to the economy is unlikely for now. Greenback has been a surprise winner in the global currency markets this year on the back of Trump's phased stimulus and strong economic data has forced the U.S. Federal Reserve to signal higher interest rates. But market watchers now believe the outcome of the midterm with Democrats taking the House and the Republicans keeping control, making any further U.S. policy boost difficult. Trump may also come under greater scrutiny, fueling fresh political uncertainty. Prospects of less fiscal stimulus also relieve the pressure of the Fed to keep raising interest rates. A little bit of a mixed bag there. There's a growing assumption that the room for another dose of stimulus for the Trump administration is going to be very limited, and that's going to push the dollar. Look, there's not going to be no more stimulus. I can tell you that. That's not even going to happen. They're not. If you think that the House is going to go and give the administration even more, it's not even happening. So you can cut that part out. But I think the dollar has a lot of other issues and why we talked about the dollar eventually having to pare back. I don't think it's going to completely fall apart, but it has the opportunity to move, at least maybe 200 pips lower in time. Maybe not now, but in time it will. Despite, against a basket of rivals, the dollar sank 0.5% to 95.75. Its lowest level in more than 2 weeks. Despite the prospect of more U.S. political uncertainty in the short term, equity markets rallied in hopes that the reduced likelihood of more fiscal stimulus would bring the end to a multi-year U.S. rate hike cycle. And that's a good reason. I mean, there's two good reasons. The Republicans kept the Senate. They actually gained a couple of seats at a time. You can see there's resistance right here at 27.89. That's that big level, remember? Look at this, so you can see why the S&P's kind of pulled back a bit from here. That's a big level right here, that 27.89. You can see where the market came here and tried to get above it, fell back, used it as support, fell through it, got back and held, and then once we lost it, that was it. Today's more of a relief trade. You might see maybe a little bit more follow through, but then I think we'll start to ease back. But I don't think the market will turn around and fall apart. Let's see. So it says, Gallical strategist said the U.S. political gridlock may prove better for markets than if Republicans had gotten another clean sweep. It would have provided a fiscal boost, but if ultimately had driven up interest rates, a big worry for equity investors. High-yielding currencies such as the Aussie and New Zealand dollars, while perceived as safe haven currencies such as Japanese yen and the Swiss franc were firm. However, some market participants believe the domestic political uncertainty might embolden Trump to ratchet up trade tensions with China. We would argue that if Trump can do less on the domestic front, it is more likely to focus on external matters such as trade that would impact risk sentiment. Elsewhere, the euro gained to 14.91 versus the dollar. Single currency changed hands more than 1% above this year's trough of 13.01. And then we'll move on. The euro bond yields dipped as safe haven gains from U.S. post-election uncertainty. The Eurozone government bond yields edged down on Wednesday, tracking a fall in the U.S. peers after Democrats won control of the House in the midterm. The result was largely expected, but the Republicans gained in the upper chamber. It taints the Democrats' win. It'll make it hard for them to win the Senate in 2 years, says Peter Chatwell. That should mean that the Trump runs for a second term in 2020 on track with the populist rhetoric set to continue setting the tone in the U.S. and beyond, at least until then. We could argue that if Trump can do less on the domestic front, he's more likely to focus on external matters. Heavy dated U.S. Treasury supply this week has also limited the fall in bond yields, while European markets brace for new supply from Germany. And lastly, with gold, gold gains as investors weigh the fallout of the U.S. election. The specter Democrat-controlled House that will see a bit of a risk-off market. Democrats rode a wave of dissatisfaction with President Trump to win control of the House of Representatives. The win creates a clear hurdle for the Republicans to easily pass legislation from both chambers of Congress. Wall Street futures and Asian shares lost steam after the Democrats won, while the dollar weakened against most of its major counterparts. In the short and medium term, gold will be bullish from here, said Peter Fung. I do agree. I think gold will eventually get that push higher. I thought, had we got a bigger swing or they'd won some key seats, I thought gold was in a position to really pop up, but it's kind of middle of the road in here, to be quite honest with you. And the outcome of the U.S. midterm elections and a 2-day Federal Reserve meeting will likely keep trading activity tight for gold prices today, said Benjamin Liu. However, the world's largest gold-backed exchange fund, SPDR, fell for the third straight session to 756 tons. With that, we're going to move on to the bias chart. Be just a moment. Okay, and let's go get started and get things back to normal on the bias chart front and get rid of the extremes. Here's our first area. We looked at 1489. We talked about 1536. And that's where you can see here the market struggled a little bit on this 89. We pushed a little bit higher. Here's that key area again. Remember, they were fighting so much, and so that's going to be. We're looking at 1538. That's on the daily. Let's go on and move into the 2-hour, and here we got 1536. So we're going to go and just call this here at 1536 for resistance. If we pop the stops right now here in the euro, there is some resistance right here, 1511. So initially, if they goose the stops and they start to pare back, it's 1511. But the risk today is going to be 1536. It's probably a little bit close here. The resistance being here at 1465. So this will be the area right here. That would be the support. a little ways off. There's some more here, right here at 1465, but that's awfully close. That's only 25 pips away. So if you come back, let's pull this back a bit. You can see this is clearly it right here. You get this medium-legged doji here, and then the market turn ahead. That's where they're going to look for support. They come back, which is going to be 1453. The euro looks like it certainly wants to go in and push those stops. Anybody that came in short, short euro here, they're going to go and push them, see if they can squeeze them. But like I said, we may run out of gas right around this 1510-ish area. And then the upside, you're going to be looking around 1536. I think we're at the beginning of this dollar correction we've been talking about. Let's go and move into cable. Well, you can see there's resistance right there. That's pretty clear. 31.83. Probably have a tough time trying to get past that. On the short haul, this is key right here, 30.81. Let's take a look at it on the intraday. Obviously, you can see here, it even pushes up even higher on the intraday, 31.92, but on the daily, it'd be key as long as it doesn't close above 31.83. I guess you could pop up here with some further moves on this. Boy, it's had a pretty good run back. Look at this. Support we saw on the daily was 30.81. Support right now are coming right there at 30.95. 30.95. We'll go right there, just a hair lower. 30.90. 30.90 for support on the cable. For now, we'll have to give this the benefit of the doubt since it has been able to close 2 consecutive times above 14.48. So on a short-term basis, we'll have to switch this to bullish. And we'll move into the Aussie dollar. I guess right now, since we already have it up, we'll take a look here at the Kiwi. Good reaction after the jobs report. Wow, and it's even above the 67.58 now. There it is, 67.98. 67.98 coming across. Right there, 67.98, 20 pips away. This has had one heck of a run here. Look at that. And we'll take a look at it here on the daily. Yeah, that's good resistance right there. 67.95 on the daily. So if you've been long here, you probably want to let off a good chunk around that, right under that 68 cents. This is a pretty good run here. Although things certainly look like they've turned around now. On the downside for support, will be right there, 67 cents. We'll call it right there, 67.98. I apologize, 66.98. So 100 pips lower is where it really comes in. If once again they start to go and take off a little bit here, and the market has to come back. This is probably more or less your risk level that you'd be looking at, as long as they can maintain a 2-hour close above 66.98. Looking here at the Aussie dollar, certainly the door's open to come up to this key level, 73.20. It's made that run. We've got some pretty good resistance right here. The only thing is with the dollar opening to slide back further, I think that we have to, like right here, this is a pretty good low resistance here. You see that? Right there. And we ran, we're paring back a little bit, 72.98. The only thing is the dollar's still open to a little bit further slide. I don't know if that's gonna take it with it. If the euro gunzo stops just above 15. For right now, it's already had a pretty good little run here. Look. We know the 73.20 is looming. I don't think we'll stretch it and hit that right now. So I'll tell you what, let's go with this, which is right there, 72.98. But 73.20 is staring this market big in the face. I don't know that we're going to hit that today, but you can see how key 73.20 is. We'll go with the 72.98 for today. And that's going to be support right there, 72.38, about 50 pips lower, 72.38, which if you look at that, 72.38 would be just below right here. See, so that makes a lot of sense right there. Might be able to argue that it could dip as low as right there, 72. Let's go right there, 72.35. We'll call it 72.35. See that coming across? See this high here, here, like that, and see it coming across? There, you've got 72.35. That also coincides right here and here. So 72.35 for support. And with that, we can move on to the dollar CAD. We almost made it to that key level right here. It's 31.71. The market is now starting to slip here. And I think that's key. Remember we talked about that 31, this is where Blake was getting short. And I thought, boy, that is a good level there. They tried to pop up, and you know what? The dollar CAD didn't do that much, considering, you know, initially when we're getting some dollar positive news. So it kept it within a range, not even challenging the 31.71. So the resistance now, we do have this area up here, but I think any moves up here to 31.33 is the market would be happy to take them on. Another thing is also you're starting to see a little bit of a bounce here in crude, maybe a little bit oversold. So that'll be a little bit positive for the Canadian currency. Also, we do have IVPMI today, so be aware of that. So we do have some CAD data today. Support. And like I told you, I don't like to use trend lines per se, but I will when I think it's almost, I wouldn't say like a pivot, but where a market could start to look a little bit tired. And so here we go. See that? So market's already had a pretty good run. Now, one of the things we talked about, remember, we said how it seems to be real easy for this market to give up its gains. And then it has to work so hard to get up. You know, you keep working like, come up here and like, okay, we finally took out 30.93. Look at this, 1, 2, 3, 4, 5, almost 6. And then within 2 bars, you're down here. It's like, you know, 6 bars up, a lot of good hard work, and you give it all up in 2 bars. So we were talking about this, look, you work real hard. I mean, the market's going against you because we quickly fell so much. So you work really hard. They're trying to sell it off, but you keep the faith, and the market's still pushing along. It gets knocked back a few times. It keeps coming through. And you finally took out the highs, just like you did here. You're looking at it on top of the mountain. Things look rosy, and then you slide right back down. Then the market's just like, I've had enough of this, and it just slides right back down again. Now we start working a little bit harder again, working a little bit harder. We take a quick dip. That's what I think it's right now. It's open to move lower at this point. And that is what you'd refer to then as the price on a shorter term basis, the price structure. Because like I said, you know, you work really hard to get up, and then you lose it real quickly. I mean, like it's no big deal. Then you work really hard to get up. You're making some pretty good progress. Like, man, this thing could really go. Maybe we're going to 32.50. Look at this thing. It won't. And then in 2 bars, you give it all up again. Then you work really hard again. You finally make, I mean, you've really done the homework here. Now we can finally start moving higher. You start sliding, and we lose it all again real quick. We kind of hold our own, and we lose it again. Then you start working harder again. So that's what I'm saying is, we mentioned this yesterday and the day before, it's easier to give up its gains. It works really hard to do what it can, and then it's easy to just fall apart real quickly. So just be wary of that. Support will come in right there, 30.33, 30.33. $30.25 be the 38%, and we're looking at 30.33. Tell you what, we'll just keep this one, the 28 that we had from yesterday. That was the first initial area if it were to jump back. So on the upside, we got 31.33. It's still bullish. It hasn't made any big changes to say it's not bullish anymore. Dallas Swiss, I thought there was an opportunity for this one to really come apart. Had we seen big gains by the Democrats. So it's kind of doing its own thing still. Resistance it's pretty clear, is right here. Par 05. Support. I don't think the wheels are going to come off or anything like that. So support will be 99.20 right there, 99.20. But it gives it the chance for the buck to slide back. Oh, there it is. There's our 99.20. So the dollar yen, we were looking for this to eventually resolve itself up to 13.89. They gave it a push here. Look, there's a 13.89. Here's the two fibs. Came pretty close. Look at that. 13.81. Actually, yeah, 81.5, 81. As the saying says, close enough for government work. But although the idea is that, I mean, the Democrats did gain control of the House, so that was going to be dollar negative. My thinking was we'd make it up here and then we would just languish. You know what I mean? And then the market would have to decide where it wants to go. So I think the market's going to be willing to take on shorts, on any additions, you know, if the market tries to move back up here, because you can see, I thought we'd be able to resolve ourselves to 13.89. Well, it made it to 13.81. That's not bad, 8 pips. But I thought we'd probably languish here. But obviously, like I said, overwhelming fundamental factors can move a market as opposed to technicals. You always want to go with the technicals, but overwhelming. Now it's overwhelming. I don't know, the midterm elections yesterday. So that's what I'm saying. You have to take that into consideration. It did come up here. I thought we'd probably just, I figured, once again, with the price structure, we talked about that last week, suggested this market still wanted to move higher. And I thought we'd eventually resolve ourselves to 13.89. We came within 8 pips. 13.85 is a 78%, so they missed us by 4 pips. 13.81 is 161% of this. See right there to the pip there. But we had this good confluence of these two fibs and a level. But I think the market is going to feel emboldened to be able to take pot shots at this. I think so now resistance would be right here, 13.55. I don't think the dollar yen is going to come apart real fast. I think it's going to be, it reminds me of this back here. We'd have to go much further, but I'll tell you what it reminds me of. Remember we were hanging around here and I thought, this is when we were at, wasn't here. Oh, hold on a moment. Let me see where it was, right in here, right there. There we are. And the market was just hanging around. And I go, wow, it just looks like it could really slide. Well, obviously, you look at this on a daily, you can see a lot of little, you know, almost like a gravestone doji right here. But I said, you know, this market's really open. It could slide. And then all of a sudden, within 3 or 4 days, we really lost a big chunk of change and started sliding. It was this move here, right there. I mean, like out of nowhere, finally just, so the market was kind of tired. This kind of reminds me similar, but not from a daily basis, obviously, but from a 2-hour basis. And I think that, so I think they'll be willing to take pot shots against this area here. Once again, the resistance is going to be 13.55. I think the market could hang around here, and then you could eventually start to see it slide. And the first target would be that 1166. And then I think we could eventually wind a lot lower, but I think where you'd find some real support with them would be like around 1095. So still a pretty good fall, would be a fall. I think we'll just hang around. Like I said, this market looked like it wanted to resolve itself to up here, 1389. We came within 8 pips, but I don't think the market's going to turn around and just lose it all. I just think that the market will hang around here, just like I showed you in the daily, and eventually it will resolve itself lower. So I don't think there's a mad rush to get short. I think the market will be willing to step in and take it on, with the risk probably being it have to be a 2-hour close above 1402 in order to get people to run out, cover the shorts. But I think keep an eye on this. I think it will still kind of hang around here, and then eventually we'll start breaking lower. Support right now would then be 1263. 1263. We're going to finish early today. Every day we end up finishing late and having to be run out of here. But we'll finish early today. There's no doubt about that. Let's go move in now to the dollar index. Well, we've been looking for a top in this thing, and I think we've got the top now. For a lot of reasons. You can look at fundamentals, you can look at technicals, you can look at price action. To me, I think price action / structure is the one thing when you mix it with the environment as to why the dollar is going to fall. And I made this case a week ago, and I've made it before. So you have the strongest economy. You got the employment continue to go. Retail sales continue to go. Such low unemployment. PMIs. The euro can't get its, pull itself out of, morass or whatever. And really, throughout the entire summer, we still couldn't get higher. This market couldn't save itself. Look at that. With all this stuff that happened up to this point, we couldn't move higher. It took this Turkey story to get us up here. Okay, remember? And then we turn around and we give it all back, okay? Then we start climbing. You've got the Federal Reserve completely going the opposite direction of all central banks, okay? This market should have been up in here. That's where the market should be, 101. That's what I'm talking about. The price structure has been poor. So, like I said, we read that story. Remember, it's about 3 weeks ago, 3.5 weeks ago. I read that story and I liked it because it gave, that's what I'm saying. I'll read it to give us context. You're not going to trade on it, gives you context. So say, hey, you know what? The market's scratching their head like, the dollar's gained 4.2% against emerging markets, but it can't develop against developed currencies. What the heck's going on? And they said, oh, well, you know what it is? It's the crude oil. That's why, even though crude oil doesn't have as big of an impact as it had before. Okay, that makes a lot of sense. So remember that Monday we said, okay, we're now watching 71. It breaks 71. We're going to 64 cents, blah, 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 blah. So once it broke 71, I said, hey, 2 consecutive days and it's on like Donkey Kong. And sure enough, we start sliding. I was looking for $64. Here was the support. Remember, there's that 78%. And we saw that bounce. So I said, wow, they've taken the leashes off the dollar. And certainly the dollar responded. That being said, honestly, it was a pretty piss poor showing when they finally take off the shackles, and now the dollar can soar like an eagle, but it may actually move like a pigeon. Okay, so once again, price structure. But of course, we had the employment report coming on, and like I said, still have banks diverging, and the euro was being held by its own shackles, which was the Italian issue with their budget. Okay, certainly didn't look like that thing could ever get fixed. So the dollar kept its bid, and it went actually an extra day. Plus, we had end of the month. Okay, but now, like I said, for a market that should be trading at 101, okay, and that's not saying much. That's just 101. Can you imagine? Everything has gone the dollar's way, and we can't even get above 98. We can barely even get above 97. And everything's gone its way. Can you imagine when everything starts to catch itself up? And now Democrats took control of the House. We had the issues with, the deficit. And some of these other issues are going to continue to grow. What if I think the economy is doing well, but what if it just backslides just a little bit? Well, golly, if we can't rally when we got every single thing, not, I mean, you check it across the board, 1, 2, 3, 4, 5, 6, 7, central bank divergence, you know, economy on fire, employment so low, purchasing managers, retail sales, all going its way, other countries having all kinds of problems, whether it's the issues with the Brexit, trying to get that resolved, or the Eurozone and its growth and inflationary problems, and then add on to the mustard, the Italian news, and look, we're barely treading water. We finally just got a little bit above here. So that's what I'm saying. I would expect this market eventually to come down to 92.5. So that being said, why I think that the dollar is on its way for its correction. Now, it's not going to give up the ghost quickly, but at least once again, I just want to provide that context and why I thought the dollar would top out on the end of the month. So once again, I think it's going to come, the wheels are going to come apart, but I believe not all, but some traders will begin to sell this market with impunity. And that comes in right there at 95.36. 95.36. Support on a short-term basis, well, we just about made it there. There's 63. There's actually, this is much stronger right here, but there's support there. And actually on a half hour, it was 67, but we'll go with this 95.52. Because if the euro adds on, you know where your risk level is. Gold, well, I think gold's bullish now in light of things, although I think we could have done a lot better, but we gave the reasons why I think gold will now be able to move higher from technically speaking. And we held up fairly well here. Gold just needs a catalyst, I think, at this point. I think whatever catalyst that's going to be, I don't know. We should be able to pop up. But it's certainly done. And Blake pointed out a very good chart. I thought it was on the money. He posted this in the Asian session. It was, I think it was something like this right here, okay? And I don't know what it was like, but anyway, it was a little triangle, and eventually we're going to end up breaking out, and I think we'll break out to the upside. But I don't think it's going to happen immediate. We just need a catalyst. I think we will. The next key target eventually is going to want to go, you can see 1273. On a short-term basis, I have 1258. I think right now it's just going to be playing its little ranges until then. It just might be when the dollar pops back up and then starts to lose steam. At that point, remember, we have a lot of bulls still in the dollar. I mean, a lot of bulls. So probably give you an example right here, or what I'm referring to. So let's see, we get this move back up in here, and we kind of hang around. On the second break, that's probably you'll see where gold can start to move higher. And then if we see a little bit more unwinding, that's when gold would really take off. So it's probably going to be trying to say dollar centric, or I think it's going to be, that'll be the catalyst as the dollar starts to pare back. I think gold, technically it's holding up very well. It's not as strong as, like I said, the way the dollar yen was, and I thought it would resolve itself to 1389, it made it to 1381, but it's in a situation where it can easily start to move higher. And I think it's kind of open for that. We held up very well in light of this, the election talk and all this other stuff. So I think it's open. Resistance is going to be 41, and support's going to be 1223. So it's going to be pretty straightforward. Everything here is just a mixed bag right here in the middle. But I wouldn't be short this market. I would not suggest a short, not even on an intraday basis. Moving on to the 30-year bond. We had 38.06, so it looks like it made it just about to that area here. There's that level we were talking about. It did make it up to 30. Well, we missed it off by 3 ticks. That wasn't too bad. Resistance is still going to be 6. Support 37.13. Let's go into the boon. Now, the boon's lost some of its safety bid, obviously, because for different reasons, things didn't go all crazy or whatever. So we've lost, but it's still holding its own because they said a lot of supply coming in, which is one of the concerns is going to be for the U.S. going out. Trying to look at something real quick, see if I still have it, since we have a little bit of time. Be just a moment. Trying to see something, doggone. I can't find. Well, one of the things is I was reading some stuff. This is this weekend from Morgan Stanley. Morgan Stanley is very, very good. But anyway, their longer term outlook was indicated this week's rally took place. It's talking about the dollar within a long-term bearish trend driven by worsening global liquidity concerns. Potential Chinese fiscal stimulus may capture attention, but longer-term forces like the Fed's balance sheet normalization should continue to weigh on risk, while foreign investment flows into longer-term U.S. assets like FDI, bonds, and equities have been slowing. Allocations to U.S. money market instruments have increased, which bodes poorly for the risk outlook and the dollar going forward. We talked about this a few weeks ago, and I said eventually you're going to see some news about, because remember the way that the S&Ps were reacting. Everybody wanted to be in equities, U.S. equities. So you had these flows going into the dollar for good reason. But now look, you see what I'm saying? So now you're like, hey, do you want to buy some more? Let's go and hurry up and buy some more dollars so we can go into U.S. equities. It's just not going to happen. It's just not going to happen. So that's why there's a lot of headwinds for the dollar going forward. And like I said, when you get some of these dollar bulls start to give up their positions, holy smokes, and you're really going to come down and you're probably going to see other markets drive higher, i.e. the gold market. I think the gold market will eventually get to 1273. But there's a lot of headwinds that are going against the dollar. And that's what I'm saying is when I thought this was the one thing that could have really pushed the dollar higher. I mean, you would have blown the stops, which is when we finally got crude oil to break $71. And I thought, man, that's it. This dollar's going to go to Venus. There's no doubt about it. And suddenly we got a boost, and then it just quickly runs out of gas. It's like we just got. It reminds me of that little video with the Chinese, South Korean missile launch. It shows a little firework cracker thing, and the bottle rocket goes up and then quickly falls apart. That's how this was. When you consider that finally the last thing that's holding the dollar back was crude oil, and then we just barely popped to new highs. I mean, that was really disappointing, and why I thought that we would top out, and the last gasp was going to be the end of the month, and that'd be it. So, but we have find ourselves with a little bit of time. Which, so anyway, that was the talk there on that. Let's go move back into the bun. So support now for the bun. Let's take a look at this. Well, we've just gone past the 38%, so probably the wheels aren't going to fall off or anything. So let's put it right there, which is just below 59.39, right there, 59.39 for support on the buns. Resistance, and we just dipped at 36. Look at that. We got some support that, like I said, 39. Try and push a little below, maybe 34, maybe. You know, then there's a little pivot right there. You see here? This little right there. You see that? Oh, right there. Right there at 35. We'll actually call it 35 right there based on that. So we'll just move that. That's the support for today. That's where the risk comes in right there. And with buns, you know, they can really get this, might even ripple, push even lower, but you can see right there. If people play the short side, that's a good area for covering. Resistance now is going to be right here at 59.74. And let's go move into the DAX. That's where they made it to previously. DAX is trading rather quiet. Pretty surprising. Considering how quiet it is, that's going to be the resistance right there, 11,648. And you can see it coming across here. You see that? So it's going to be 11, right there, 11,648. About 50 handles high, 50 ticks. And that's, the boom moves a lot more faster than the S&P. I mean, I'm saying the DAX. 11,648. Move this to a 2-hour chart, so hold on. Right there, you see right here? Coming across, got some decent touches. 11,517. 11,517 for support. What do you know? For once, we're going to finish early. For once. Once again, just a quick recap on the euro. Here's the level that they want to go, 15.36. Now, we do have some resistance coming in above that, just right in here, 15.08.5, almost 15.10. If they want to blow the stops, I wouldn't say blow the stops, but just to hit them, you can be looking around 15.11. But the one area that your risk level is 15.36. I think you'd see if we get up there, I believe you'd see quite a bit of, decent portion of longs being taken off. I think eventually the euro can go higher. We talked about this 15.78 and maybe even a little bit higher. But I think if you look at the dollar also, this is a good area for the dollar. We have that marked off 95.52. There's actually a little bit of even support at 63, but right there, you see that coming across. Let's highlight this. You see that coming across at 95.52. Right there. So it's pretty good support level, a key level right there at 95.52. You can see here support with a stab down there on the wick, another stab down. Look at this, nice bounces. Matter of fact, on the second bounce, considered on it as a double bottom at the time, and look how we got moving higher. And when we came back, they defended that area. You see that? And then we moved even higher. When we came back down, where did they find support? 95.52 again. We get another bounce up here. And then when they lost 95.52, it slid below, they run out of gas again, 95.52. And then we work lower. Then when we get above it, where do we find support again? 95.52. We rally, pretty nice rally. And where do we find support again? 95.52. Come back down and set another, take a stab just a hair below it, but on a closing 2-hour basis, 95.52, and work higher. So any stabs down here, you can see some good short covering. So pay attention to your DXY at 95.52. Cable 31.92, but on a daily, it's key at 31.83. This will be key on a daily. So as long as it doesn't close above 31.83, we'll actually mark this off with the asterisk too. That's going to be a key daily. And that takes us to the end of the show. We'll actually finish a couple of minutes early, unlike we usually finish behind. And thanks for joining us here on the European Crossover Webinar.